Hello, I'm Dan Passarelli of Market Taker Mentoring here on the floor of the CME Group. Well, today I'd like to talk about one of the trades that we talked about in our Market Taker Live Advantage Group coaching class just today. The trade is in Ford Motor Company. Now take a look at a chart of Ford. Now you might look at a chart of Ford and think, well, it's not really that exciting. But I find some things very, very exciting in Ford. Now, over the past 5 years, Ford is actually down about 27%, while the S&P 500 is up very, very strongly. But over the past couple of months, we've seen a little bit of what I think is a turnaround in Ford. We've seen higher lows and higher highs. That defines an uptrend. And we see Ford right now just touching its 200-day moving average, and I think it's poised to break through, and I'm trying to get a little bit ahead of the technicals on this trade. Now, Ford also has a few fundamental things going on that I think are really, really strong and provide for a nice bullish opportunity. The one is Trump is talking about imposing tariffs on foreign cars imported into the U.S. So this is part of the China trade war that's going on, and it's sort of the latest chapter in the saga. Now, what is most likely here, in my opinion, to play out is one of two things. One is if the tariffs are imposed, well, that means people are more likely to buy American, which is great for Ford. But what I think probably Trump's actual agenda is to get China to further lower their tariffs on American cars going into China. And if that happens, well, that's potentially great for Ford also. It's sort of a little bit of a win-win, potentially. Also, Ford has an agreement worked out to put in charging stations across the EU. All these things, plus the technicals, I think set up for a great bull trade in Ford. Now, the trade that I like is buying the July 11 strike calls for 80 cents or better. Now, in addition to the fundamentals and the technicals, there's one more thing that makes this simple, straightforward bull call trade a nice strategy, is that the calls are cheap. It's, about a 2-month call, almost a 2-month call for 80 cents. These calls are cheap because implied volatility is very, very low. Implied volatility is that sort of supply-demand factor embedded in an options price, and there's not a lot of demand. So I think that we're seeing a little bit of a diamond in the rough opportunity here. So to recap, the trade we talked about in our Market Taker Live Advantage Group coaching class is this. It's buying the Ford July 11 calls for 80 cents or better. You can use a stop to manage risk in case the 200-day moving average holds and Ford ends up falling. Or if it breaks through like I think this trade could potentially double in value within the next maybe 2, 3, or 4 weeks. I'm Dan Passarelli with Market Taker Mentoring, and if you'd like a trial of our Market Taker Live Advantage Group coaching class, simply surf on over to markettaker.com/GC. That's markettaker.com/GC, 2 T's in a row in Market Taker, and get a trial today of our coaching class. Trade well.